We have with us in the studio the CEO at Milestone Capital, Dagogo Iyoma, here in the studio to look at the market performance for January, and also the CEO at Enterprise Capital, Rotimi Fakejo. Thank you, gentlemen, for coming on the program.
Welcome.
Thank you. Good morning.
We are discussing the January market. Some people say the January effect, all kinds of names for the performance. But I want to start with Rotimi. How would you describe the performance of the markets in January?
Well, for what happened, I think it's not beyond what ordinarily would have been expected, vis-a-vis the fact that the election is oncoming and is a very major factor going forward to determine anything that happens to the future of this country. So people are apprehensive, and it was quite expected, and a lot of people have actually liquidated their positions, and that has made the market to be very bearish. So, and as such, we saw the market going down very low. I think it's been one of the very worst January we've seen, and with that in place, I believe that the expectation going forward is still very low. But by the time the market weathers through what is passing through right now, we definitely will see a brighter market. But be that as it may, the other major factors that have actually affected the market, the devaluation of the naira, and the banking sector, a lot of the rating and every other thing that they need to look at, I think those things are actually affecting us. And the volume, the value is still about steady due to some major transactions. And I think with respect to volume and value, I think the market didn't do badly. But with respect to the performance of the OSHA index and market capitalization, the market really did very badly.
Dagogo, Rotimi talked about the political environment as one factor that seems to have impacted on the market negatively in January. Do you agree with that? Or should I say, is that the only factor responsible for that?
We all know it's not the only factor. That is internal. The external pressures are onerous. We've seen the dollar get stronger. We've seen the Eurozone continue, in fact, get into almost a deflationary, getting deflationary. Now, these external pressures would obviously put pressure more on the naira and the local economy. And don't forget, we've run a system over time recently where you have more foreign portfolio participants, participating in the market, and these external imports will obviously have its, effect on the market. You find with interest rates going up in the U.S., with the economy, strongly reviving, stronger dollar, quantitative easing out of the way, you find that there is attraction towards the U.S. economy, first of all. There is interest in a revived, a resurgent U.S. economy, and all of these will begin to shift attention of foreign participants in our market down that way. Again, we've seen what crude oil is now. Crude oil to export countries, massive export countries like Nigeria, will be losers in the crude oil game, whereas more import-oriented countries like China, Europe, will see reduced oil prices as massive gains for them, and that will obviously spawn investments and production in those areas. So you find that we are faced with hydra-headed challenges, internal and external pressures at the same time, very economy, and these are very, very strong influences, okay? And that is why the fiscal managers particularly have their work cut out for them, yes.
Okay, of course, we're actually taking a look at what happened in January. Let me come to Rotimi. We had the exit of the Director General, the former Director General of the Securities and Exchange Commission, Ms. Aruma Ote. How did this come to you, and how did it affect the market?
Well, for operators, it was quite something they were expecting. For the legislature, it was what they have actually been pressing hard to happen. They have mandated the president for quite a number of times that the woman has to go due to the kind of situation, rough situation that actually ensued between the House and the Securities and Exchange Commission. And when the news came, I believe the operators, it didn't take them by surprise, because it was part of the meeting that took place at SEC with the SEC DG and the commissioners, and that all the commissioners took side with respect to the increase or the deadline given to stop capital market operators, and on the other side stood the former Director General of Securities and Exchange Commission. And I think as such, the capital market operators believe that the deadline that was given to them was not actually what ought to have been. And as such, when the news came that she was going, though initially it has been announced that the deadline had been postponed till September 30th, 2015. But even that, as it came, it was quite a welcome development to the capital market. So the market took it with heart, and they see that things have to move forward. We have we have an acting SEC DG right now, and I want to believe that maybe within a period of time, there will be a substantive DG that will be appointed for the Securities and Exchange Commission. So I think our exit, well, in our tenure, we've seen a lot of things happened, but our exit also, I believe, at a time, she will have to leave anyway. So this coming at this point in time is really nothing out of place that the market was actually expecting.
Now, Dagogo, what's your take on Aruma Ote's exit? And how did it get to stockbrokers and even those that you relate with, the investors?
Well, the truth is, on the one hand, there are people who are pleased with what the former DG Aruma Ote had done and her achievements, which they reel all around. But on the other hand, there is the group that believes that her high-handedness, her perceived high-handedness, has actually done more damage to the market than otherwise. My view, my honest view, is that whereas I want to believe that she would have been genuinely interested in bringing about reforms that will move the market, a notch further. But I would think that she could have approached it in a more collective, a more engaging manner. First of all, I'm not sure she had all the commitment and support of her staff in each of the moves she made. I'm not sure she carried along most of the participants in the market. I'm also not sure that, again, we all know the kind of forced relationship she had with the legislature. Yeah, you want to be a reformer, you want to make these changes, you are eager to get them to push them across red tape, and you want to slide past a system that is already, in your view, is already accommodative of certain poor practices, if you like. But that doesn't mean you will, in trying to reform and reposition that system, you will actually overlook the existing participants. I think that I didn't think there was any other way to go other than for her to take a bow at that time. Yes, I think, again, if whatever she's done, she's already shown to the market her capabilities. If those policies, the good policies that she had brought to the table, will obviously be continued. The ones that have not suited the market will obviously peter away. That's my thinking. I'm neither here nor there. I think that we all are, my ordinary view is that we all are working towards a better protected and effective market.
Rotimi, the new acting DG, Manu Gwazu, what's your take on the expectations of investors and the markets in general for the acting Director General?
Oh, well, when you say acting, it's not expected to be there for long. And as such, there can't be any major change which he can implement for now. We saw when there was an acting capacity in the CBN, there wasn't any major decision that was taken at that time until we had a substantive CBN governor. So likewise, in this dispensation, I wouldn't expect any major change, though there has been some reform within the SEC head office. Some people have been moved from one department to another, but I don't really think that is much, that has a lot to do with development of the market. So for now, there can't really be anything substantial that can be done by the acting DG until the substantive DG is actually pronounced on the market. So, and as such, I want to believe that this will only continue what is already on ground, and the process will just flow pending the time there will be a substantive DG for the Securities and Exchange Commission.
All right, Dr. Gogo, let's move on to the active part. I call it active because of the issues of trading and shares and all of that. Now, I have a report here which actually states that the last week of January accounted for the highest value of trading as investors staked 28.9 billion naira on 2.210 billion shares. How would you assess the performance of the market itself in terms of the value and the volume that was traded?
Well, in January, we saw some high volume block transactions move. We saw in ETI, we saw in Oando, and a few of them. I think that those high volume block trades significantly impacted the volume and value of January trades. Otherwise, I think that the market was a bit dull. Were it not for those block transactions, it could have been quite. It would have gone the way of capitalization and the index as well. It would have been muted, very muted. But we had those. Luckily, we had those block transactions, and they helped enhance value and volume. Yeah.
It seems there were no issues with liquidity, Rotimi, in January, were there?
Well, I think with what you have said, those major block transactions were actually responsible for the kind of volume and value that we saw. But otherwise, the liquidity of the market will have been very low.
Okay, let's take a look at the activities of speculators. How would you describe that? I'm going to stick with Rotimi in the market for January. Were they active? Were there any market movement based on speculations in the markets?
Well, I think all that we saw in January were more of downward movements. And if you want to say that maybe the backlog of January transactions, we saw a good movement, a good upward movement in December. So we are looking at a backlog of December 2014 transactions, whereby they've taken position and expecting that maybe things may still move better than what we've seen. But I think it didn't happen. So otherwise, because of the apprehension within the system, we saw a situation whereby those stocks, some securities actually came down significantly. We saw the likes of GT Bank. It came below what ordinarily one would have expected, all the way from about 24 naira to about 17 naira at the time, and thereafter moving on, moving up a bit and stabilizing at that point. We also saw the same thing happening to Zenith Bank. We saw the likes of Access, and majority of the banking sector stocks actually went down during the period. So the activity of speculators are always there. So there is that mindset that they will have taken position down now, expecting further devaluation of the market, pending the time they can come back and recoup their positions.